Hi guys, welcome to this Money Control live stream. You're watching Opening Bell with me, Nandita Khemka. Brand new day, and of course the cues are looking fairly positive this morning, even though we had a mixed close on Wall Street last night. But of course the GIFT Nifty hinting at a fresh high, 22,600 could be on the cards today, and PSU banks will be in focus, and so will be the companies that have been trickling in with their quarterly updates as well. So lots lined up over the next 35 to 40 odd minutes. We will also be taking up all your stock related queries with our experts on the show. So if you have any queries, keep them coming in on our live feed on YouTube, and we'll try and have them addressed. But before we move any further, let's take a look at the top headlines at this hour. Wall Street ends mixed with the Dow dropping for a third straight session. In fact, Fed Chairman Jerome Powell has reiterated that the central bank would need more evidence of inflation easing before it could start cutting rates. Asian markets edge higher as investors assess comments from the Fed chairman. Meanwhile, markets in Hong Kong, Taiwan and China remain shut for public holiday. The GIFT Nifty, as I mentioned, is indicating a dash at the 22,600 level for the Nifty. Crude holds 5-month highs as geopolitical concerns mount and as OPEC Plus reaffirms production cuts through the month of June. Meanwhile, gold shines at record highs as it stays above that $23 an ounce mark. And in fact, base metals have also rallied as USD has eased off a bit. And Tesla gets a step closer to setting up a plant in India. Reports suggest that it will send a team by late April to scout for locations for a $3 to $4 billion manufacturing plant in the country. All right, with that, let's take a look at all the cues for trade this morning. If you look at the Nifty spot, it ended largely flat. In fact, ended just about shy of that 22,450 mark. But today, the GIFT Nifty is hinting at a positive start. In fact, 22,600 is where the GIFT Nifty is at the current juncture. The India VIX index also cooled off further, 2.5% or thereabouts to end below that 11.5 levels. The mid and small cap indices continue to outperform, with the mid-cap index, of course, hitting a fresh high in yesterday's session. The mid-cap index gained, in fact, for 8th straight session, the longest gaining streak in 4 months. Let's take a look at the F&O cues as well. The Nifty open interest was up 0.8%, added somewhere around 78,000 shares. If you look at the Nifty April futures, they were trading at a 107.95 point premium vis-a-vis a premium of 124 points. The Nifty Bank Index, in fact, the open interest there was up over 5%, and it added somewhere around 99,225 shares or thereabouts. Looking at the put call ratio, well, it is at 0.95 vis-a-vis 1 in the previous session. And, stocks in the F&O band include the likes of SAIL and Z Entertainment. Those stocks are new in the F&O band, while Hindustan Copper remains in F&O band. Remember, it was added yesterday. I also want to mention that the Nifty has introduced NSE has introduced 4 new indices in the cash and F&O segments. These indices, of course, will be available for trading on the 8th from the 8th of April rather. The new indices include Nifty Tata Group 25% cap and Nifty 500 multi-cap India manufacturing. Other indices are Nifty 500 multi-cap infrastructure as well as Nifty mid-small healthcare. Fund flow picture, FIs remain net sellers. In fact, they sold shares worth 2,200 crores in the cash market, and DIIs continue to continue to be net buyers to the tune of 1,100 crore rupees or thereabouts in the cash segment. But on that note, let me bring on board our technical expert for today. Joining me is Chandan Taparia of Motilal Oswal. Great to have you on the show, Chandan. Looks like we are poised for new highs today. So what are the levels that you'll be watching out for on the Nifty 50, particularly on the higher side? And for the Nifty Bank Index, particularly for the PSU Bank Index, we saw a good rally coming in. And tomorrow we have the RBI policy outcome, right? So do you think the Nifty Bank is poised to head higher?
Good morning, Nandita. Thanks for having me. So major trend of the market is positive, and Nifty is absorbing all the supply near its lifetime high. Earlier, it made lifetime high at 22,526. 2-3 days back, high was 22,529, and it has been consolidating in that range. But supports are intact, and every small decline is being bought. And that's why we believe that fresh leg of rally or fresh highs will be there in the market. So overall, on positional point of view, 22,222 is the major support for the rally towards 22,750. For intraday point of view, 22,350 is the support for a rally towards 22,650. So buy on decline or positive stance will continue, and post the breakout, the momentum could accelerate in the market. Now talking about the Bank Nifty index which has comparatively slightly underperforming in last few days. Yesterday it closed near highest part of the day, and selective PSU banks and private banks started to witness buying interest. We have more positive view on the PSU bank, including Canara Bank, PNB, SBI. So talking about Bank Nifty first, we believe that supports are shifting higher, and the way the structure is formed, 47,250 is the support, and Bank Nifty has potential to rally to us 48,250 to 48,600 zone, which is the lifetime high territory in the banking index.
All right, that's the view then on the key indices. But, I just want to talk about specific stocks that will be in focus. Avenue Supermarts, DMart. Strong Q4 update coming in, 20% kind of growth on a YY basis in the fourth quarter. And there has been, some bit of number of store additions as well. The total number of stores rather stood at 365 at the end of the March quarter. Recently we had CLSA also upgrading the target price on DMart. Here on, do you see some bit of upside here? Do you spot a trade in DMart?
Yeah, we have positive view on the same. Stock has really seen good run up in last 2 weeks and has been consolidating from last 4-5 days. Technically speaking, it is completing a pole and flake price pattern, which indicates fresh leg of rally. So DMart can see the up move. 4,400 is the major support. Somehow we are expecting a rally to us 4,650 to 4,800 zone in the DMart.
What about the oil and gas companies like ONGC, Oil India, given the fact that the government has hiked windfall tax, on crude production to 6,800 rupees per ton from 4,900 rupees per ton. Of course, this comes as a bit of a negative news for these companies. On the charts now, how are ONGC and Oil India poised?
Yeah, so first let me talk about ONGC. Trend is positive. It is making high rise high lows on the daily scale. So with support of 270, it can head to us 290 zone. We have positive on the Oil India. Technically speaking, it has given a major consolidation breakout. So with support of 620, it can head to us 665 zone.
Right. Before we move any further, what would you be keeping on your radar in terms of stock picks for today?
So talking about stock specific idea, we have a positive view on counter like Indian Hotel. One of the strongest name. It completed a black pattern, which has only simplification. So recommended to buy with support of 600. Rally can extend to us 630. And positive on the Voltas, another name in the market.
All right, hold that thought, Chandan. Markets have opened and they have opened in the green, 22,550. That's a fresh high for the Nifty. In fact, if you look at the mid and small cap indices, even they are in the green today. Of course, fresh highs. The GIFT Nifty, of course, was hinting at that 22,600 level. Let's see whether or not we manage to mount that level as well. But both the Nifty mid and small cap indices showing strength as well, moving in tandem with the benchmarks. Good uptick coming in. The Nifty has hit that 22,600 mark as we speak. So record highs are here already. We will be, of course, asking Chandan as to what kind of upside we can expect in today's session itself. But looking at some of the other movers, the Bank Nifty, very strong gains coming in there. 48,000 on the charts for the Nifty Bank Index as well. And if you look at some of the movers, in terms of sectors, let's see what the other sectors are doing. Pull up the realty pack. Yesterday, it came under some bit of pressure after, a stupendous rally that sent the index to 16-year highs. Today as well, it has managed to bounce back after yesterday's correction. So 0.6% kind of gains coming in there. Let's also see what the metal pack is doing. Metals, of course, should be doing well given the fact that the USD has cooled off a bit. So yes, 1.5% kind of gains coming in on the metals pack itself. Moving on to some of the gainers and losers in trade, HDFC Bank is emerging as a top gainer on the Nifty today. 2.5% kind of gains coming in there. Hindalco, NTPC, Power Grid, Tata Steel, Axis Bank are some of the other movers. And if you look at the losers, few and far between, only 3 losers on the Nifty. IndusInd Bank, ICICI Bank, Sun Pharma and Apollo Hospitals. These are the names that are losing. But let's also pull up the stock of a DMart before we, touch base with Chandan once again. Want to see how DMart and Federal Bank are doing, particularly in trade, given the fact that they have reported very strong Q4 updates. For Federal Bank in particular, disbursements have been pretty strong. All right. So, Chandan, let's also talk about the IT pack, given the fact that, we've had brokerages coming out with positive notes on IT sector as well, despite the fact that, Q4 may be soft. JP Morgan today has pointed out that, you should ignore the soft Q4 and, kind of see how the stocks are really poised in terms of valuations. We've seen some bit of correction kick in over the last 1 month as well since Accenture cut its guidance. But how would you play the IT pack? Would you look at frontline names like TCS, Infosys, or would you look at the likes of Coforge, Persistent Systems, KPIT and the likes?
Yeah, so if you look at the Nifty IT, it completely witnessed some profit booking in last couple of days. But if you look at the now stock wise compared to TCS, Infi and other name, then first thing we need to keep in mind that most of IT stocks are still finding some pressure at higher levels. So because of that, we don't have much stronger view. But yes, OFSS is one counter, Oracle Finance, where we will focus. One of the strongest setup. It is support near 8700. We are expecting 9300 kind of level. And if you want me to talk about heavyweights name, then I'll focus on TCS with the view that it has formed the bottom near 3820, 3850. And with that support, it can witness a bounce to us 4100s.
All right, that's the view on the IT pack. But Federal Bank, it has reported its fourth quarter business update. As I was mentioning, disbursements have been strong. The stock is doing okay, up somewhere around 1% or thereabouts. Are you spotting any trade here? 155 levels is where it's at the current juncture.
So can you please again?
Federal Bank.
Yeah. So talking about Federal Bank, so Federal Bank has seen gap of opening, but after that follow-up is missing. So it's likely to be in a range. But I believe that 152 is the support. With that support, it can head to us 161 zone.
All right, that's the view. But given the fact that we have hit a fresh high today, the trajectory looks on the upside. All the experts that I have spoken to, they've always maintained that the dips have been bought into, and the texture of the markets remains on the positive side, given the fact that we've seen a fair bit of resilience even on days when global cues haven't been supportive, right? So in that sense, what is the kind of F&O strategy one should adopt for the next couple of sessions now, Chandan?
So if we talk about the market point of view or selective sector or stocks, we believe the trend is intact. And we have noticed that every small decline is being bought. And if you look at the India VIX, in last 6 weeks, it has corrected from 16.37 to below 12 levels. So falling volatility clearly indicates that bulls are dominating and having the upper hand in the market. VIX is trading at multiple months low. In fact, in this year, it's down by around 20%. And we are heading towards the elections phase and volatility is down. That means participants are not as of now at all fear. So that clearly indicates that bullish stress could continue. Either we can go with buy on decline or can initiate the bull call spread kind of strategy. If you ask me, the setup 22 to 22 is the major support, and with that support, index can hit to us 22,750 to 23,000. One can initiate 500 points bull call spread by buying 22,500 call and selling 23,000 call. Initiate this 500-point spread. And stock and sector wise, one can focus on selective capital goods, few auto name, a couple of PSU names, hotels. So these are stocks likely to be apart from your strategy in the Nifty.
About the likes of Nestle and Britannia, they have been witnessing fair bit of weakness. Even yesterday, they were among the losers. What are the kind of stop losses one should keep when it comes to these stocks?
So we've noticed that selective FMCG stocks are not doing well. If you look at Britannia, just 6-7 days back, the stock witnessed decent recovery, but the momentum is fizzling out at higher levels. So yes, supply is clearly visible, but supports are intact. If I talk about the Britannia, major support goes at 47.40. If it breaks 47.40, then need to reduce the long positions. If it goes above 5,000, then only the aggressive position could be there. So as of now, 47.40 to 5,000 is the broader range. Decisive range breakout only can give the fresh leg of rally, but as of now, the momentum is missing or follow-up is missing. If I talk about the Nestle India, again, same sort of story here. Multiple hurdles and barriers are visible near 26.40, and downside supports are seen at 2,500. So 2,500 to 2,650 is the broader range we need to play. So those who are holding the positions, they need to keep the support below 2,500 level in the Nestle for long side.
Right, that's the view, of course, on the FMCG pack. But let's take up some queries that are trickling in as we speak. Naveen wants to know your thoughts on an NTPC. This stock has been consistently, featuring on the Nifty gainers list, right? Last 5 sessions, we've seen an 8% kind of a gain. It's very close to its 52-week highs as well, just about 3 rupees away from that. So NTPC, how is the risk reward looking like here, Chandan?
So when we talk about NTPC, the stock is holding well. We are witnessing sustained buying interest from last 6-7 trading session. It witnessed a V-shaped recovery. So I believe momentum could continue, and selective power energy stocks are holding well, and the entire sector is doing well comparatively. So with support of 350, we are expecting a move towards 372 in NTPC.
Right, that's the view. I hope that answers your query. But I had spotted a query on Tata Steel as well on our feed. This one is coming in from Aman Jain. Of course, metals have seen a lot of action over the last week or so in the wake of China data, and of course, now dollar has also cooled off a bit. So we are seeing quite a bit of action in metals pack, right? Especially the steel names like Tata Steel, JSW Steel have been doing fairly well. Here, how should one trade? It's Tata Steel is once again, in fact, has hit a 52-week high today itself.
So, looking at the Tata Steel in last 5-7 days, we have witnessed buying interest in most of the metal name. However, today Tata Steel has been consolidating in a range, but till it falls above 160, we will continue to be with buy on decline stance. 160 is the support for up move towards 172.
All right, that's the view on Tata Steel. But just saw a query on Gail on our feed. Gail is doing is pretty flat right now, but if you look at the price action, it's inching towards its highs, and 5% gains in the last 5 days. Even over the last 1 month or so, it has remained sideways, so to say. Uh, on Gail, how is it placed on the charts?
So, like if we talk about the Gale, it witnessed good decent recovery from the lower levels, but today has been consolidating in a range. But major setup is positive, so we'll go with buy on decline. 185 is immediate support for 195. So likely to be in positive range bound setup.
All right, that's the view then. I want to ask you about defense stocks as well. Quite a few queries coming in on a daily basis on defense names. Of course, PSU stocks did witness some bit of correction, but defense stocks have made a very strong comeback. The likes of HAL, BEL, they've all been, the cynosure of all eyes, so to say. So, Nias Basha wants to know whether BEL, Bharat Electronics, warrants a buy at current levels. He wants to buy for the long term. Would you advise looking at some of these names now, or would you say wait for some bit of correction?
No, we have positive on the defense and capital goods, and HAL, BL are two preferred name. We have talked about the stocks multiple times. In last 10 days, we have seen a decent recovery all the way from 2920 to 3600 plus. So major trend is positive, and we believe with support of 3500, 3800 kind of levels could be there in HL. However, already we have seen decent run up, so risk reward ratio might not favor, but trend and setup is clearly positive. Talking about BL, we'll wait for decline, continue to be with buy on decline in between 217 to 220 with support of 210, and overall we have target towards 235.
All right, that's the view on BEL. Hold that thought, Chandan. We'll come back and discuss more viewer queries and stocks with you. But let me also bring on board Feroze Azeez, Deputy CEO of Anand Rathi Wealth, who's joining in this morning. Thanks a lot for taking out time and joining in, Feroze. Whatever correction we saw, some bit of gloom that we saw is out of the way, given the fact that we've hit a fresh high today, 22,600 already on the charts, and even the mid-cap index has hit a fresh high, right? So, is it safe to say that the correction that we saw in the broader market is over for now, and another party is just about starting as we head into the elections?
Yes, Nandita, like when there was a little nervousness,
Right, I think
when there was a little nervousness, Nandita,
right,
sorry.
right. Please go ahead.
When there was some nervousness on the broader market because of some degree of froth indications from both the regulator and the broader market in terms of fund management also was speaking of a lot of fraud. But I personally think that is behind us. Of course, mid cap and small cap over the last three trading sessions have outperformed the Nifty almost by about 4-5%. And logically so, because when capital markets get monies, they get it on the basis of past performance. Short-term blips of 10-15 days of outflows were there in the first half of March, but the last 10 days of March gave small cap 100-150 crores per day in the mutual fund industry, which brought them back to track. If money comes, broader markets can't fall. And money comes on the basis of past performance. And past performance is still showing very well. Unless past performance for a quarter shows badly, retail investors still keep flogging at the small cap funds. And I think the broader market rally will continue. The second thing which I think is supporting the broader market rally is the kind of index depth which FIIs are having in the broader market. FIIs are supporting a lot of stocks because MSCI Small Cap India Index has about 450, little over 450 stocks. So the broader market is being supported by FII. And FII purchases, small index purchases, results in huge buoyancy in the broader market.
Right. Coming down to sectors now, autos and realty, these have been the star performers of FY24. We've seen fabulous returns from these two indices, right? From a valuation standpoint, what are your thoughts on these two pockets now, Feroze?
I think both these pockets are interest rate sensitive. They are trying to preempt the bond inclusion of India into the MSCI bond index, the world bond index, and the kind of $20-25 billion which is expected in the bond market, which will be one of the first times Indian government paper would get that kind of influx. So these two are interest rate sensitives. And if yields come down, then both these are supported by borrowings from NBFCs and banks. I think that's what is the play here. It all depends on what kind of yield compression do you expect. If you look at the 10-year GSEC is about 7.1, 7.15 thereabouts. But if you're believing that this interest rate can fall down to 6.25 a year from now, then the valuations still seem fair to me.
Right. Of course, we also have the RBI policy tomorrow. As we are heading into elections, it's pretty much a consensus that you won't be really expecting some bit of a surprise coming in from the RBI. But anything in particular that you'll be watching out for from the governor's commentary?
I would like you rightly pointed out, this might not be having any material action, but I think commentary wise, the repo rate decrease is imminent because inflation has been under control and almost in the range always through the last few months. So I personally think the interest rate or repo rate reduction is what I think the indication of when that can happen is what I would look at.
Right.
But very importantly,
sure.
Nandita, this time around, I don't think the 10-year GSEC and repo rate are going to be as correlated on the downside. People believe that if repo rates come down, bond prices will go up, but that's not going to be the case as much because the long end of the yield curve is just 50 paisa more than the repo rate. If repo is at 6.5 and 10-year GSEC is at 7, there's just a 0.5% spread, which is not the normal. Generally, the spread is 1.5%. So the compression between the yield curve will not result in repo coming down and 10-year GSEC equivalently coming down. And I think most of the money is made both in the equity side and in the portfolio side on the bonds is made if the 10-year GSEC compresses down to 6.5, 6, which I think is going to be demand and supply, which is going to drive it and not repo this time around.
Interesting point you made, Feroze. But I want to shift your focus to the IT pack. I know you called out the IT pack a couple of years ago. We have been getting positive brokerage reports on IT companies, right? Despite the fact that Q4 is expected to be a soft quarter. But for someone who wants to enter into the IT space right now, would you advise them to look at mid-cap names rather than the frontline ones?
Yes, absolutely. I will look at the mid-cap names more keenly than the large ones because I think in IT a certain degree of agility is lost. And I think there is going to be a lot of transformation in business models. I think the mid-cap IT has the agility to embrace AI far more efficiently than the larger businesses do.
Hmm. Uh, we are at record highs and it's the start of a new financial year and a good time to reassess and make adjustments to portfolios, right? So what kind of an asset allocation would you suggest now for people who are looking to rejig their portfolios at the current juncture?
Firstly, whatever was the asset allocation of a specific individual last year, if there is any change in the asset allocation because of differential mark to market equities, now for example, in our model portfolio, Nifty delivered about 27, 28 last financial year, and our mutual fund portfolio delivered a 16% alpha. So the equity side got a mark to market of 44%, and debt got a mark to market of 7%. This automatically shakes up the asset allocation which you had on 1st of April last year. So bringing it back to sanity is critical, for which you'll have to sell some equity, buy some bonds. It's going to be very hurtful to do that when an asset class is doing well, but discipline is the rule of the game. Is first point. Now coming to the asset allocation, if somebody wants to revisit the asset allocation and not just rebalance it, I would say that 70% in equity is very, very critical for long-term monies. If it's greater than 5-year money, I would say 80-90% in equity is not a bad strategy. As long as you're playing equity not through direct equity, but through a mutual fund platform, the equity itself is going to behave lower risk than Nifty in most cases. So 80% equity or full direct equity portfolio could be risky, significantly risky, but 80% mutual fund portfolio is half as risky as a direct equity portfolio of 80. So 80% in equity, 20% in debt for long-term monies greater than 5 years. I would not be surprised if this combo gave you 11-12%, but a 50-50 combo will not be able to beat double-digit returns. And I think it's mandatory in India in a high inflationary economy to beat double-digit returns to protect the value of your money.
So for a mutual fund investor, which are the best funds to invest in now? Would you advise investing in, multi-cap funds, thematic funds, or ELSS funds, so to say? How should one, really go about the sectoral funds as well? I mean, how would you advise them to look at their investing portfolio?
Yes, Nandita, see, I think mutual funds have to be looked at bottom up. There are 385 funds which are actively managed, and the difference between the returns in each category is 22%, 25% per year. So it's not just going to be able to deciding the category which will decide the fate of your money. If you don't decide the scheme right, or not even the AMC right, in our model portfolio, there are two schemes of Kotak. The best one is Kotak Multicap, and the worst one relative to the benchmark is Kotak Emerging Equities. So the point I'm trying to make is it is not even the AMC choice, not even the category choice, but the specific scheme choice, which is nothing but bottom up, is what is going to be deciding the fate of the mutual fund portfolio. Mutual fund portfolios throw up very divergent outcomes because of the dispersion of the performance of different schemes. So now let me get specific and tell you which schemes you can pick. Kotak Multicap, you can surely look at. SBI Infrastructure, now that you mentioned scheme, which is thematic, I would say SBI Infrastructure, a small scheme. Bhavin is the fund manager. He used to be the infrastructure analyst from long periods of time. And if you read his reports on infrastructure and his capability to spot interest rate sensitive and infrastructure stocks, has been very good because he's been an analyst for long periods of time. That's the second piece of recommendation. The third piece of recommendation on the HDFC stable could be the HDFC focused equity fund. And last, on the Kotak side, you can also look at a fund which is called the Kotak Quant Fund, which tries to manage smaller monies, but in a little riskier fashion, but to generate alphas which are reasonably larger to Nifty. So these are the four funds which one could consider. And Nandita, definitely I've given you one thematic kind of a scheme for the viewer.
Well, of course, a good mix of funds you pointed out, Feroze. But when we're talking about asset allocation, we cannot not talk about gold, right? It has been hitting record highs on a consistent basis. So what is the portfolio allocation one should look at towards gold, and in which form? digital gold, bonds, physical gold? What would you advise?
Nandita, I would request one to not have gold if he or she is not prepared to buy sovereign gold bond. If sovereign gold bond exists, the rest of the forms of gold from an investment standpoint are obsolete. There is hardly any situation in the financial services industry where, in financial assets at least, that you get an arbitrage of 4-5% per year. You're getting 2.5% interest, taxable, of course. You're also getting capital gain tax exemption. That's the only instrument which is left in India, which is giving you capital gain exemption. 20% tax on a 15%, 10% return is also 2% exemption. So sovereign gold bond, if you're ready to buy it, and then I think gold could be 10% of one's portfolio.
All right, that's the view then on gold investing. But with that, Feroze, thanks a lot for taking out time and joining in. And I hope you take care of your cough. I think it's quite bad. Have some hot water and get okay soon. But we'll, of course, touch base once again sometime soon. And I look forward to having that chat with you.
Thank you, Nandita.
Thanks a lot. But Chandan is waiting by then. Let's take up some more viewer queries then. Mars Financial, that is one query that I spotted on our feed. The stock was not doing all that well, but over the last 5 sessions, it has seen a good pickup. On a Mars Financial now, how are the levels stacking up on the upside?
So if you talk about Mars Financial, the major trend is negative to range bound. It got stuck in a range, but yes, in last couple of days, it witnessed recovery. If I look at the last 6-7 weeks, it corrected from 387 to all the way to 270 zone. But now recovery is visible, and because of that, some more bounce could be there. As of now, those who are holding, they can look at support near 290, expecting a bounce towards 315, 320. But one need to keep in mind that this is just range bound or swing kind of trade. Overall positional view would be range bound, or upside will be kept for the counter.
All right, that's the view on Mars Financial. Pon Rajesh wanted to know about this stock. Hope that answers your query. The next query is coming in on an SBI card, which has been stuck in a downtrend, although it is trying to make some bit of a recovery, right? Trading in the positive zone. Alex wants to know your thoughts on this particular stock, SBI card. Do you see a decisive turnaround in the trend, or would you say that it's still on the downside?
So major trend is still negative, especially when Nifty index is hitting to the new highs. This stock is continuously making lower top, lower bottom, and quoting near its last 4 years lowest level. And we have noticed that every small bounce is being sold, and there is a reason that we don't want to be with such name. It's better to be with the counter where we are having relative strength. But yes, if someone is looking for trading setup, 685 is the support. Upside hurdle is near 720 zone. So one need to play between 685 to 720 zone for the counter.
All right, those are the levels to watch out for on an SBI card. But I spotted a query on Triveni Engineering on our feed. Narendra Pandey wants to know your thoughts on this particular stock. What would you advise him to do? Should he enter into this stock? And if he holds it, how should he go about this, his investment?
So overall, if you look at the counter, it witnessed recovery from lower levels, but again, a positive to range bound bias could be there in the stock. If he's holding, my advice is to keep the support near 324. Upside will be near 352 zone.
All right then. Last query for the day really. This one is coming in from Vignesh, and he wants to know your thoughts on Borosil Renewables. And he wants to know if he can look at a target of 700 on the stock and whether or not it's the right time to accumulate this counter. The stock has done well on a 6-month basis, but then came under some bit of correction. So 700 kind of target, is it on the cards, or do you think it will take some time?
I think 620 are the levels to watch, because on weekly scale it has negated or completed its downside move. It is from the higher base near 480, 500 zone. So with that support, we are expecting 600, 620 marks.
All right, that's the view then. Hope that answers your query. But with that, we've come to the end of the query segment. And Chandan, of course, we have come to the end of the show as well. So thanks a lot for taking out time and sharing your thoughts with us. Always a pleasure interacting with you.
Thank you, Nandita.
Well, with that, let's see what the markets are doing. We did hit a fresh high today, but we have come off from the day's high below that 22,500 mark. So some bit of profit taking at highs coming in after hitting that 22,600 mark. Even the mid-cap index has come off the day's low. The bank Nifty, however, had hit that 48,000 mark, just a shade below that crucial level. And of course, banking names like HDFC Bank have made a good comeback today, 3% kind of gains coming in there. And some of the PSU names continue to do well, the likes of NTPC, Power Grid, and metals, of course, also shining bright, given the fact that dollar has cooled off a bit. But on that note, we are completely timed out on this edition of Opening Bell. Let's hope the momentum that we are witnessing in the market continues and we manage to end above that crucial 22,500 level today. But of course, we'll find out whether or not it does that or not on closing bell. So join us at 3:30 p.m. for that. But also want to say that we will be getting you, live coverage on the RBI policy tomorrow. Ahead of that, what should be the expectations from RBI this time around? I'll be getting you a chat with our banking editor at 1:45 p.m. So tune in for that as well. Thanks a lot for tuning in from me and the entire team. But you guys stay tuned to Money Control for all your other news and updates.